Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of a growing sense the US-China trade war might be heading for a resolution. But first, the overnight dairy auction was a positive one, with prices rising 3.7% in US dollar terms, although somewhat undermined by the rising exchange rate, so that in New Zealand dollar terms, prices are up only a bit more than half of that, up 2.1% from the prior auction. However, the rises justify the recent hike in the payout indications. Compared with this time last year, prices are up 20% in US dollars, up almost 25% in New Zealand dollars. The US trade deficit was little changed in September, but it remains stubbornly high at an annual $653 billion deficit, a rise of 4%. In the month, the deficit with China decreased only marginally to $28 billion US dollars. Overall, the annual trade deficit with China remains high at $350 billion, or more than half the total deficit, even after the US imposed substantial tariffs. In the end, China has kept on supplying orders from the US importers, and American consumers have been paying the tariffs. The trade talks are ongoing, and it looks like, however, that the Americans are ready to compromise. The face saving seems to be a deal on China controlling the illicit drug trade, and in return the Americans will roll back tariffs on $112 billion of goods trade. If that transpires, the US will have gained little from the skirmish. The widely watched US report on services PMI has this sector expanding modestly and slightly faster, suggesting that GDP is growing at a modest 2.1%. The other similar survey didn't notice the uptick, however. None of this data has set Wall Street alight today. It remains near record highs, however, but is flatlining today. That follows better gains in Europe and even better gains in Shanghai, Hong Kong, and especially Tokyo, which was up an impressive 1.8% yesterday. All three markets are sensing a positive end to the US-China trade war that will benefit them. In China, their central bank has cut the interest rate on its medium-term lending facility for the first time since early 2016, as policymakers there work to prop up a slowing economy. The cut, however, was modest, a modest 5 basis points to 3.25%. The private survey of China's services sector PMI was broadly stable and positive, with a small gain in the expansion level. In Australia, their October services PMI slipped back sharply, indicating they have no expansion in that sector now. And following the modest theme, their central bank held its benchmark rate in yesterday's review in what was a somewhat upbeat assessment of Australian economic prospects. Rate cuts and QE seem to be off the agenda there now. And the US Treasury 10-year yield is rising again, now at 1.86%, and its highest level since August. But gold has slumped overnight, down more than $25 to $1,484 an ounce, which is a chunky 1.7% dive in a day. And US oil prices are firmer again, now at just over $57 a barrel. The Brent benchmark is just under $63 a barrel. But the Kiwi dollar slipped back a little to 63.8 US cents, but that's where it was a week ago. On the cross rates, we're 0.5% lower at 92.5 Australian cents, and against the euro, we're little changed at 57.6 euro cents. That puts the trade-weighted index down to 68.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.